Before we take questions, I would just like to introduce you to the panel members other than Ashit. Firstly, we have Jidit Shah, who has been a financial advisor for over 30 years and is the founder of Crystal Financial Solutions based in Harrow. From humble roots, the company has expanded over the years and now provides financial advice to clients all across the UK whilst maintaining the personal touch. The motto of the company has always been to put the client at the center of all its attention. The company advises on pensions, investments, residential and commercial mortgages, inheritance tax planning, and also on the full range of protection, including life insurance, critical illness cover, and income protection. Secondly, we have Yogesh Nagpal, who is a protection specialist and the director of Aegis Life Financial Services, which is an independent whole-of-market insurance advisory firm and has over 14 years of experience in the financial services industry. He has an MBA from the University of Northampton and mortgage and finance qualifications from the London Institute of Banking and Finance. During a successful and varied career in retail banking, he gained a passion for helping people and providing good, honest advice at all times. His key clients are individuals and families who wish to identify their shortfalls in protection planning and understand and achieve their goals with the help of a professional. Yogesh speaks 5 different Indian languages and is fluent in Gujarati and Hindi, which helps him to communicate effectively with his clients without the technical jargon. Yogesh has also appeared on live television and written articles on various protection and insurance solutions. So thank you, panel. If I may direct a question, maybe Ashit, you must need a break. if I can ask somebody, maybe Jinit, please. Cladding issues following Grenfell has caused downward values on properties. What is the current stance by lenders on these? Any idea?
I think that's a question for Rashid.
That's okay. I'll take that. That's fine.
That's fine.
Glenfell Towers, those are specific properties that not every lender will cover because of the number of stories that it has and the high rise. So there are only a very few lenders that will cover. And at the moment, most of the lenders are being very, very cautious about such values. So it has to be a case-by-case basis at the moment, depending on where the location is, how many stories it has, and mainly subject to valuers' comments.
Okay. Second questions. Maybe this is one for Jinit, actually. Critical illness cover. Obviously, different insurers define what critical illness is differently. Is there something out there which provides a comparison of definitions by the different insurers?
There is a software that is available that shows a comparison of the different critical illness covers available.
Okay, is it available to everybody or?
No, it's a subscription model for financial advisors and protection advisors.
Can I just add one more point, Jumit?
Yeah.
Yeah, I mean, it was one of the points I missed out at the end. So sorry for that. Yeah, it is on subscription basis. It actually compares all the policies because the same policy from the same provider could have different things covered if they were taken out at different times over the last 15 years. So it's a subscription model. A lot of advisors do use that. So it's worth checking with them.
Mm-hmm. Okay, question for Yogesh. Yogesh, protection cover makes sense, no doubt. However, where should one draw a line in prioritizing and deciding which cover to go for? Obviously, there is a cost and presumably the premiums keep rising in some cases.
It all depends on individual circumstances. So if somebody is single or married or have financial dependence, protection starts with that, the basic need of what you want to cover in. It all depends who you want to leave the money for, what is your budget. Hence, a professional advice or a professional advisor comes into place where you discuss which stage of life you are in, what are your liabilities, what are your risks, what is the term that you wish to have the policies for, and place it within your budget so that it's affordable not just now, but for the term that you're taking it for as well.
Okay. Ashit, a question for you. Is a remortgage available up to the age of 80 for a person who is 65 years of age, but still in employment?
Is that for a normal house mortgage, I assume?
Yeah, assume it's a normal house mortgage.
Yeah, normal house mortgage. There are some lenders who may look at that. However, the biggest question will be depending on your age that you want to retire and the affordability in your retirement, basically. So say you wanted to retire at 70, and how would you be able to afford the mortgage beyond 70? If you have things in place, for example, you've got income coming from investments, which is sufficient to finance or pay for that mortgage or anything else, then the lenders would consider that. But there'll be very few lenders lending up to the age 80. But it is possible, and it's on a case-by-case basis. You have to look at the other circumstances.
Okay. Let me just go to one of the other questions, which, is it possible, and this I'll address it to Yogesh. Yogesh, is it possible to have private medical cover for a person under the age of 18 without parent joining in cover? So it's a standalone cover for a minor, effectively.
As far as my knowledge goes, most of the insurers, the high street insurers and the known names in the private medical insurance market generally don't allow clients under the age of 18. Parents need to be on the policy and they can have children as dependents.
Okay. I think somebody's asking about this name of the software, the subscription model. What's it called?
It's called the CI Expert.
Sorry?
The CI Expert.
CI Expert.
Critical illness expert, basically, CI.
Yeah. It's CI Expert and De facto, which is a well-known comparison provider which compares general insurance products as well. Even they have come up recently with a comparison model. But it all depends on the individual financial advisory firm, which software they use.
Okay. Junit, a question for you. Where somebody has a pre-existing condition, is it possible, is there any way to cover this under a private medical scenario?
If you've got a pre-existing conditions, most insurers will put an exclusion on it, so it's not likely to be covered. However, some insurers will allow you to have the cover after a period of, say, 2 years or 5 years, provided you remain treatment-free in those 2 or 5 years.
Okay. And this is a question, well, actually, it's for all three of you, actually. It's where commissions are involved, obviously, in the insurance broker market. How can you distinguish between a cheap parachute and an expensive parachute?
For life insurances, I think you're really looking at the cheapest premium product, and whatever the commissions the insurers pay you, that's the commissions. But you're looking at the cheapest premium for life insurances because for death, there's only one type of death. For critical illness cover, an astute financial advisor will look for not the cheapest cover, but the most comprehensive cover, again, depending on what the clients require. So whatever the commission for that product would be, that's part of the parcel.
Mm-hmm.
Can I just add something?
Sure. Sure.
For example, people say online covers are cheaper than through a financial advisor. The simple reason is you're buying something off the shelf that is ready-made. Is that suitable for you? There is no advice. There is no other extra benefits included in those covers. Most of those covers do not have the extras that I talked about, the GP services and the second. So there is a lot more involved when you buy from, and that's where a cheap parachute and an expensive one comes in.
And more importantly, it's the questions as well, and any queries that the clients have, clarifications. Because if you look at any insurance policy document, it contains a lot of terms and conditions, a lot of features. This is where an astute financial advisor or insurance specialist will come in and explain it to you. If you have any queries, if you're not sure of anything, you can at least have a conversation on a one-on-one basis.
Okay. Ashit, you mentioned a lifetime allowance. What was the lifetime allowance again? I think it's just a recap.
So that relates to your pension lifetime allowance of 1,055,000. Basically, so the
sorry, it's 1,073,000.
Yeah, it's 73 now. From 4th of April. So
Correct.
basically, when a death in service pays out, it goes towards your 1,073,000 allowance on your pension. Whereas if it's a separate life insurance, if put in trust, it does not form part of anything. Basically, it goes tax-free.
Okay, thank you. I think I have to go back to Ashit on this one, sorry. If you've opted into a protection plan from your work benefits, what would happen if you are made redundant?
Well, technically, most policies that I know of, or most employer benefits, your policy will end there and you will not be covered thereafter, because those ones are based as a group policy rather than individually, specifically. Some are allowed to take with them, but I've heard of very, very few that would be.
Janet, can we put a critical illness in trust?
So a lot of the critical illness policies that we recommend are life with critical illness cover. We would put those policies in trust, a flexible split trust. The life, so the critical illness benefits, if somebody was diagnosed with a critical illness, they want the benefits for themselves whilst they're still alive. But just in case, if they never suffered a critical illness and were to die, that would go into a trust. And that's the reason why it's called a split trust, a flexible split trust.
Yogesh, this is a question, basically, somebody is a director of a limited company, and their husband is working with them in the business, and they have 2 employees. Can they all get life insurance through the business, and are there any tax advantages?
Yes, they can get insurance from the business. It's called relevant life policy. It's a very tax efficient way where a limited company can provide for their employees. So effectively, even if in this case, depending on the shareholding, whether the client is owning 100% or having as an employee, as long as they've got Schedule E earnings, which is salary paid to themselves from the business, it relates to an employer-employee relationship. So the employee in this case, the lady who's asked the question, is a separate legal entity to the limited company. So hence, the business can provide for life insurance for these 4 individuals, and it's tax efficient. So there's no income tax or there's no national insurance, and the company can also claim corporation tax relief at source, which makes it very tax efficient. The policy will be put into trust from inception. So before the policy starts, it has to go into a specific relevant life trust. So yeah, it is available for all of them.
Okay, can I just follow? Sorry, go on.
That's the one I said, which I called high net worth death in service.
Yeah.
I didn't name it relevant.
Okay, brilliant. Thank you. Sorry, can I just follow up, Yogesh, on that one? What are the tax consequences of putting into trust a whole of life policy set up about 20 years ago?
So any life policy, if it's not put into trust already, can be put into a trust. The client can ask their insurers to provide. Generally, it's a discretionary trust, so there are no tax implications for putting the policy into trust. If the person passes away, whether it's a term policy or a whole of life policy, the proceeds get paid into the trust.
Mm-hmm.
There are no tax. That's the whole purpose of putting policies into trust, is to put a shield around the policy effectively. So there are no inheritance tax or capital gains tax or no tax implications on the payout. So as Ashit has mentioned in his presentation as well, the right money to the right people at the right time. That's the advantage of putting policies into trust.
Sure.
So there's one comment I just wish to make there.
Please.
If it's a whole of life policy taken out 20 years ago, does it have a cash value? And if it is a policy with a cash value, there may be some tax implications. Again, that needs to be
looked at specifically.
Yes.
Yeah. Sure. Janit, what's your opinion on relevant life cover?
Relevant life cover is an excellent insurance policy available to employees of companies. Usually directors will take out a relevant life cover for themselves. It's paid for by the company. So like Yogesh had explained in his previous message, it's paid for by the company. It's treated as, it's not treated as a benefit in kind. So the employees or the directors do not have to pay any tax on it. It's written in trust, so the benefits are paid free of inheritance tax.
Yeah.
And the premiums are allowable or may be allowable as business expense.
Okay. Ashit, do new protection policies exclude the coronavirus pandemic?
They do not exclude per se, but obviously before they are accepted, they will have to answer those additional questions that I mentioned. All the applications have that. At the moment, I've not heard of any insurance companies excluding coronavirus as one of the causes at the moment.
Mm-hmm. Okay, this is a question. Again, I'm going to throw it open to all three of you. You may have a different viewpoint, whatever. What is your take on dying in debt or in credit for high worth property to minimize IHT? So create debt now and enjoy as long as you can afford the increased mortgage repayments. Start. Whoever wants to start.
I think that's an excellent suggestion. You're minimizing your inheritance tax, but if you've got other incomes that can support your families when you die, then that's an excellent suggestion because you're minimizing your inheritance tax. And I think that's what the questionnaire was alluding to.
Yeah. Any comments from you two gentlemen?
I think I can echo what Jinit just said. Obviously, it depends on individual circumstance because there could be other planning things that could come in. But yeah, to answer it in short, what Jinit says, I echo that same.
Okay. This is an interesting question. Maybe Ashit, you may be able to answer this. For people who are looking to set up a business in the future, would the business protection change, and what is likely to be included in that?
So basically, business protection is as I mentioned, it was either relevant life cover or shareholders protection or business loan protection. So it all depends on what that question leads to. So again, if it's to do with relevant life cover, then I think we've covered that in two questions. The benefits of having relevant life cover for the directors and employees of a small company, basically. So I'm not sure if that is the question that it relates to.
Okay.
Because
Yogesh,
otherwise business protection could be anything to do with shop insurance or
Yeah.
other things which we are not covering in this forum.
Sure. Yogesh, just a question for you. Are protection premiums likely to be higher in the post-COVID-19 world?
It's a difficult one to answer because nobody has got a crystal ball. So the insurers take, at the moment, what we've seen, and as Ashit has covered in his presentation as well, we haven't seen an increase in premiums at all from insurers. So any new policies that are being done now, there's no change or drastic increase in premiums. What may happen in the future, it all depends on the insurance as an insurance industry as a whole. And it all depends on what sort of payouts they make, whether that impacts the overall pricing. Time will tell.
And generally, death should be death. I mean, whatever reason for it. The coronavirus is just a virus. I mean, somebody dies from that. That shouldn't be excluded.
That's not excluded. Ashit has already covered in the
yeah.
That's
exactly.
Not death is death. However, I was reading somewhere today that the life expectancy for UK has gone down. The projected life expectancy, and that's how actuaries price their policies in the future. As to what premiums it will be based on the average life expectancy of UK males and females. So whether that affects the pricing, we have to wait and watch.
Especially if you want the life policy for a longer term. So let's say till age 90, then
Correct.
Those premiums may be much higher because life expectancy has gone down.
Correct. Or even whole of life or any longer term policy. I echo with that.
Okay. Sorry, I'm just asking the questions which are sitting in here. Okay. Here we go. Ashit, or actually Jinit, this one, as you haven't answered the question for. If your fixed term mortgage is coming to an end soon, what should one look at now, considering the base rate is at the lowest, at 0.1%? Should one look at variable rates or a new fixed term mortgage? What are the advantages and disadvantages of each?
I think I can answer the question, but I think Ashit is more suited to answer this one.
I can do it. I don't mind.
Okay, go for it.
Yeah. Basically, most lenders have removed all their tracker deals. So because the base rate is so low, there were tracker deals of, let's say, 0.5% over base. Those deals have gone because lenders know they cannot commit to that while the base rate is so low. So most of the good tracker deals have gone. So the tracker deals available now would be, let's say, 3 or 4% above base at the moment, which are quite high. Fixed rates are at an all-time low. It all depends on individual circumstances, what your plans are for the next 2 years, 3 years, 5 years. If there is any change in the 2 years, then you may want to secure yourself for the 2 years. Nobody knows where this is going. The rumor is the base rates will remain low depending on how fast we come out of all this. So at the moment, there are no tracker rates available that low. So the only ones available are the fixed rate deals mainly, or very higher standard variable rates.
Okay, thanks. Yogesh, if I turn to you, how does one decide with income protection versus mortgage protection? So if you have a young family with 20 plus left on mortgage, but children's school fees, etc., covering too. So, how would one decide on which mortgage to go for, which protection?
Yeah, again, referring back to Ashit's presentation there as well, he did mention that all sorts of protection policies, namely income protection, critical illness, life cover, each of them has got a place in the financial planning or protection planning for every individual. The way I believe, and I would probably ask Ashit and Jin to add as well, that income protection is the foundation of every protection planning effectively. Because if income is the element which pays for all the luxuries or essentials in everyone's lives. So whether it's a mortgage, whether it's education, if you don't have any income coming in, everything stops, everything crashes. By mortgage protection, I presume the reader has asked the question around probably life insurance. So there needs to be, that's a more cost-effective solution. As Janet said previously, if you're looking just to cover the death and cover the liabilities, life cover is a brilliant solution. However, income is the most key element that needs to be protected. So a balance of everything, again, depending on budget, depending on how long the exposure or risk exposure is, will decide which options that the client can do. And every review meeting or every meeting the client has, if they decide to take on something, it's not a setting stone. It's not that if somebody does something now, that's it for life. Life changes, things happen, people have kids, mortgages are paid off earlier, they have a job change. So at all these key junctions, you should get in touch with a professional advisor and review to make sure what you did 10, 15 years ago, even 5 years ago, is that still relevant? Or do you need to change anything at all? So it's an ongoing process. It's not a one-off thing.
Mm-hmm. Okay. I take this as a last question. I'll pass it to Ashit.
Ramit, there's a couple more questions still.
Sorry? They just come in. Sorry.
Yeah.
Let me ask this and then we'll try and wrap up as soon as possible because time is gone. I am conscious of the time. In terms of the different forms of protection products you mentioned, what if someone has got most of them through an employer? Okay. So would one be financially better off in terms of premiums to either one, start buying these protection products privately while still being employed, or when one decides to leave the employer to buy these products, then what's the best way to reduce out-of-pocket expenses whilst maintaining levels of cover?
There's no straight answer to that. Some employers actually give allowances, let's say £1,000 per annum to buy private medical, life cover, whatever, dental cover, things like that. Some actually give you those cover in place. I covered in my presentation, if you leave the employer, your protection stops there. If you want to go out at that time and take it out, one, you'll have grown older. Two, your health may not be the same, so you may not get the same priced cover. They might rate you in the sense they'll increase the premiums if you've got an illness or things like that. So it is always a tricky one when you've got those because nobody knows. And I get clients saying, I'm never going to leave this employment. And in 3 years' time, I've seen them leave the employment. So things can change. I think it's best to speak to an advisor because then we can look at their personal circumstance, what the allowances are and what the cover they have. And then what in the background, what liabilities, what their requirements are.
Okay. One question again, sorry, Ashit, but I think it's something coming from the presentation. You mentioned early on that there may not be that many valuations being done currently. Obviously, there are some valuations still being done by a number of valuers, especially with respect to empty properties.
Yes.
I presume that is correct. Just sort of, you might want to elaborate on that.
Yes, majority, a lot of the lenders are saying that if it's an empty property, we can go. It's not a problem. I'll tell you a classic example. One of my clients yesterday, his purchase has been put on hold by Halifax and he's buying a new property which is empty. Halifax have refused to go into an empty property. So there are still lenders out there not doing it for various reasons. Either it's because their valuers on their panel are not willing to go out, or it's an internal policy. But there are lenders, I've had one case last month where they did go in because it's an empty property. So it all depends on different lenders.
Sure. And I'm conscious because I know the market in bridge financing, that's still continuing and a lot of people are still doing that. So it does happen in that arena. Nirmal, you had a couple of other questions. Can you please read them out?
A question on insurance, which has come in. If I become critically ill because of coronavirus and I'm in ICU, does my critical illness cover kick in?
So one of the conditions coronavirus itself, like Ashit had mentioned in his presentation, is not one of the listed conditions that is covered on critical illness policies. However, there are certain conditions that may, from the suffering of coronavirus, it may lead you to other conditions. For example, if you remain in a coma for more than 96 hours, that could be deemed as a critical illness condition that you've met the definitions, and therefore you could be you could make a claim.
Okay. Just one other question.
Sorry, can I just add on that level quickly?
Right.
There is something new which is called ITU instead of ICU, intensive treatment unit, and there are insurance companies for up to 10 days. If you're in an ITU, it could pay out depending on the case.
Okay. All right. Okay. Just one other question that's come in. So, in the current property market, where tenants may be giving notice because of various situations that they're in, what is your guidance on whether, if let's say tenancy is going to drop in some way because you're not going to get tenants coming into properties or whatever, what is the expectation of the housing market and post coronavirus, as in post lockdown? I wouldn't say post coronavirus, post lockdown.
It's a very, very difficult question to answer, because how long is a piece of string? And as I said in my presentation, no one knows what the post lockdown mortgage market or the property market is going to look like. It's a difficult one, because there are commentators saying prices will fall. However, it will all depend on demand and supply post-lockdown. And also the biggest issue here will be people's income and their jobs. So that will have a big factor as to whether there'll be a big rental demand, or whether house prices will fall or will stay stabilize. With the way I've seen news last 1 week or last 7 days, there is quite an optimism if things go well, because I think we had a very good start to 2020, which I covered in my presentation, until Corona came along. And maybe there are people itching to move once this lockdown. So we just don't know.
Okay. Is that it, Nirmal?
That's all I've got.
Okay. Yeah. Can I think that is it. We've overrun a little bit. I do apologize. But before we finish, I'd like to a very big thank you to Ashit for a very, very good presentation, brilliant presentation. And also both Jinit and Yogesh for helping on the panel and answering the questions. It was really helpful and you know, informative. Obviously, just to let everybody know, we have recorded this presentation and it will be put up put on the YouTube channel. And what we will do is we will be sending out an email shortly or literally in a day or so with the link to that. Just go back to my share screen, if I may. Sorry. Okay. What we, as I mentioned before, we are still helping the community at large, especially the elderly, vulnerable, those in isolation, and key workers. This is our helpline. If anybody needs that, please contact us. And if anybody has any other questions, or if we have forgotten to answer your question, I apologize again. But please call or ask, do an SMS or WhatsApp us on our helpline number, which is this one. And we'll endeavor to answer your question. Finally, we will have an email coming out to you shortly asking for feedback. Please provide that. And the next session on this is on inheritance tax on Sunday at 11:30. This has been very heavily subscribed. And if anybody still wants to join us, there are only a few places left, so please register as soon as possible.
Ramit, just one thing to add there, just for everyone. So on the inheritance tax one, if we do get to the limit of that presentation, and if anyone here can't join in, what we're suggesting is that there is a recording being done like today's and like Sunday's event, and that recording will be in the CAT8 YouTube channel, where people can actually pick up the presentation from, the Q&A session as well, and subsequently, if they still have questions after that, they can come back to the helpline to ask the questions. The panel are all on the helpline as well.
Okay, thank you. The next thing is just basically, if you have any suggestions for future webinar topics or webinars, please email us at cat8webinars@gmail.com. Finally, thank you once again to the speaker and our panelists, and thank you all for attending. Please be safe, stay at home, protect the NHS, and save lives. Good night, and have a great evening, what's left of it. Thank you. Good night.